welcome to some more recordings for Chapter 4. I have our class open in Apply. I have it open in Student View, so it's the same view that you see when you log in. And there's an assignment here called Problem 4-23. So I'm going to click on that. It's labeled a practice assignment, so there's no points associated with this assignment. It's just literally here for you to practice on and get familiar with ratios and be able to work on them without having to worry about points. Problem 4-23 is very similar to the Chapter 4 required problem. The same concepts apply. So this just allows you, maybe I'll just say a safe environment for you to practice this, just to learn the assignment, learn how to do these without having to actually worry about points. Okay, so let's go ahead and load this up. I'm going to give you a few pointers about it. And I kind of mentioned that right here, the problem similar to Chapter 4 required problem. It's just here for you to learn to practice ratios. There's no points assigned to this. There's nothing in the official grade book I'm going to enter for this. And this problem's not exactly like the one in the book. There's a problem 4-23 in the book. Same company, just different numbers. They always change up the numbers a little bit in Apply whenever you pull up an assignment similar to the ones from the back of the book. So if you look at your book at 4-23, you'll notice it's the same company, just different numbers. So they give us a balance sheet, they give us an income statement, and a little bit of other information too. And they say basically with all this, compute your ratios. And I mentioned in class, but I'll mention it again, page 123 of your book has a list of all the ratios. And in the chapter they give you an example using Allied Foods. And so the ratios on page 123, they're using the numbers from the Allied Foods financial statements. So it's very easy to look at that, those ratios there, the explanation, what the numerator denominator are for all the ratios, and look at the numbers and tie them back to the Allied Foods financial statements that were provided in the Chapter 4. So that's a good way to start to learn how to do these. But these ratios, as I mentioned in class, are really not hard to compute. It's just a matter of doing some math. The current ratio, if everybody remembers, is current assets divided by current liabilities. So I would just come up to here and find my current asset number. Right there, there's my current liability number. Do a little bit of division, and I have my answer. Okay, so you can just go, once you do that, you just go ahead and drop in your number, and you're good to go. Quick ratio, remember, with that one is current asset minus inventory divided by current liabilities. The only thing we take out of current assets is inventory. Days sales outstanding is account receivable divided by average daily sales. And the average daily sales is based on a 365-day year, so you take your sales number and divide it by 365. Your inventory turnover ratio is sales divided by inventories. Total asset turnover is sales divided by total assets. Your profit margin is net income divided by sales. ROA is return on asset, that is net income divided by total assets. ROE is return on equity, that is your net income divided by common equity. So just be sure when you take a look at the numbers up here that you're grabbing the common equity number. Okay, you can see it right there. ROIC is return on invested capital, ROIC, and that is your EBIT, which is tax affected, so it's your EBIT multiplied by 1 minus T divided by your total invested capital. Okay, total invested capital. Okay, so you want to go up here. Now I'm going to leave that hint for you to find total invested capital on your own. That's one that you can definitely find. I gave an example in the PowerPoint. When we use the company financials in the PowerPoint, I explained how to get ROIC with that one. I'm giving you a lot of these, but that one I think you can look up. The next one is TIE times interest earned, which is your EBIT divided by interest. And then debt to total capital is your debt number divided by your total capital number, total invested capital. So ROIC and total capital are both divided by your total invested capital number, whatever the number that is. I will let you guys find that, but that's the number that you would use. Okay. Okay, so that was the ratios, very easy. And what you should really be doing though, and this is where it gets harder, is my ratio better or worse than the industry average? Now that's not a part of this assignment, but that's part of the critical thinking aspect I want everybody to kind of contemplate. Is I know my ratios for my company now. What do those numbers mean? And I mentioned in class that ratios are best when they can be compared to something. So I should compare my ratios to the industry and draw some conclusions. Is my ratio better, worse, the same than the industry average? And after I do that analysis, I should be able to draw some conclusions. I should be able to maybe think about some changes in my operations that I could do to make my numbers look better. Okay, that was part A, which is the easier part. Part B is shorter, but it's a little bit trickier. And that is just to do the DuPont analysis for this company. And so the DuPont analysis, I covered that in class, and it's in the recording I made for the chapter also. For the DuPont analysis, remember that we're taking the components of ROE and breaking those down into 3 different categories. And you can see what the 3 categories are right there on your screen. They are the profit margin, they are the total asset turnover, and they are the equity multiplier. So those 3 together become your DuPont equation. And what's nice about that is that you can break down the components of your ROE into those 3 categories and figure out which category is good, bad, or otherwise as you're trying to make changes to your operations to make your ROE better. But that's what those are. So it's your profit margin, total asset turnover, and your equity multiplier. So let me give you a hint about the equity multiplier. That's the one that you might find a little bit tougher to compute. And it says you have to compute that for the industry. So profit margin, total asset turnover, you're going to find those up here. So you're going to find profit margin, you'll find total asset turnover right here. Okay, so those 2 are just right there. The same numbers right there that you use below. And you can see that. You look at profit margin for 1.74 for industry is right there. Total asset turnover 1.72, 1.72. So you can see those numbers right up here. They just flow right down here. Equity multiplier though, a little bit trickier. Now, that was not as obvious, and you have to dig into the chapter to find that. So I'm just going to give it to you. And your equity multiplier is ROE divided by ROA. So there's my ROE divided by my ROA. So ROE, if you just take a ratio of 7.48 and divide it by 2.99, that is your equity multiplier. And that's the same number you would use here. So after you do your computations of your ratios, ROE divided by ROA will give you your equity multiplier. And then also you can just drop in the same number you compute above for profit margin and total asset turnover. Okay, and I will let you guys determine what these answers should be based on your analysis. That's kind of the critical thinking part of it for both C and D. You guys can guess that. And the nice thing about this particular assignment is, of course, you're just doing it to learn. There's no points to worry about, so don't, it's okay to maybe guess because you'll get your feedback and it'll tell you if you're right or wrong. But you might want to just look at the problem in the book, 4-23. It's just different numbers on this particular assignment. Whenever I do these in Applia, it's kind of frustrating to me a little bit. I wish they would just use the same numbers, or I wish I could tell it to use the same numbers in the book, but I cannot do that. I asked. It's not possible for some reason. So anyway, I hope that makes sense, and if it doesn't, feel free to email me. I'm still very available even though I'm not in the office, and I want to help. So if you're stuck or just need help with anything, please let me know. I'll be very happy to help you out. Thanks.